The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Morning from TFNN. Welcome to the June 10th, terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a magnificent Monday. I know I did, and I am grateful for your presence here this morning. For me, well, my outcome is to teach you how to master the tools for trading. And the importance is that each of us need to know what our daily outcomes. So this morning, we'll take a look at tools of the mind. We'll take a look at tools such as A to B equals CD patterns. We'll use terms like swing points, Gartleys, butterflies, various candlestick signals that the sign makers of the markets, the bulls and the bears, create for you and I each and every day, each and every time frame that we trade. And each of these patterns, each of these signals on a standalone basis are what I call tactical tools. And knowing how to use tactical tools is really important. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook. And let's not conclude that failure and losing money are the same thing, because they are not. You see, in trading and investing, our spoilage is money. It's just as simple as that. It's no different than going out to a restaurant and ordering too much and throwing some stuff away, or throwing things away in your refrigerator, maybe some bananas that maybe you buy, and, bananas, they can go ripe pretty quick, and then deep six them. Well, in trading and investing, our spoilage is money. And when we lose, as long as you've used a bracketed order, that means ahead of time you know what your exit strategy is, both on a losing side of the trade as well as on the winning side of the trade. And as long as you do that, then any failure is just simply a pattern that just simply failed. That's a part of every trading strategy. It's called system expectancy. System expectancy is our ultimate performance tool. And that's what you really want to understand. So today and every day, let's think like a strategist. Because strategists, they slay the tactician all day long. Let's go look at one of our tools to help us think like a strategist. This is the strategist that I call, it's all about our wealth philosophy. You see, our economic future is not determined by the economy, but rather by our philosophy. And recently I was questioned by a listener about a comment that I had made about the real opportunity for young people to learn about the markets that we trade and how to play the money game. Look, I've got 2 kids that are just graduating. I got 3 kids out of college. Well, one's still in their last semester out there. So I know what it's like as far as kids being able to find jobs and market opportunities. So, yeah, I understand exactly, personally, just how difficult things are. And that's really what the listener had expressed to me. But what I asked is if I could have the opportunity to persuade them that maybe things weren't exactly as they perceived, and the real opportunity for our young folks out there, and really for anyone, is to understand the money game. So I said, what I like to do in order to be able to educate quickly is link the known to the unknown. You should try to do that as well. So I asked the question, I said, do you know someone that makes $5,000 a month? The answer was yes. I then asked, how much would they tell you that it takes for them to live? And the response was, all of it. I then said, any chance that maybe you know somebody that makes, let's say, $5,500 a month? And the answer was, yeah, I think so. I then asked the same question, how much do you think that they would tell you it takes to live on? Keep the wolves away from the doors. And their response was, all of it. chances are by now you know where I'm going with this, because if someone is making $5,000 a month and it takes all of it to keep their head above water, how do you account for the $500 difference for the person that's making $5,500 a month? I see usually the key is an error of judgment when it comes to economic philosophy. Because if the second person could save $500 a month, they would be well on their way to financial independence. This is just something that I've really just shared with my kids just recently here, so it becomes pretty easy to put up on my screen. If you're watching this on TigerTV, you can see my screen, a little spreadsheet out here, relatively simple spreadsheet. And it takes a look at someone being able, the difference of that $500 a month out here, and what that actually means over a period of years, over a lifetime out here. Now, in this case here, on the left-hand side, I've got months 1 through 24. So each set of columns, if you will, is a 2-year period of time. And the only variable to throw in here is the type of earnings that they could expect over their lifetime if they were invested in the market, being able to trade in both directions out here. Now, I've got punched in here 5% yearly earnings. I would have to say on average, at a minimum on average, even just simply tied to the S&P or something, you ought to at least be able to get 10% out of it. If they learn how to trade and invest, now you're talking about 20% a year, whatever it might be. But if I just simply go ahead, I'll punch it up to 10%. What I'm doing is years 1 through 2, they're going to go ahead and put away $500 a month. Years 3 through 4, 3 and 4, they're going to put $1,000. And each 2-year period of time, they're going to find a way to come up with an extra $500, through raises, through whatever it is that they get out there. They're going to find a way to come up with an extra $500 out here. Look at a 10% return, folks, over the period of 120 months, right? That's 10 years. Your kids or somebody just effectuating this plan out here, over $250,000 out there. And that's if they only made 10%. When you take a look at compounding out there, and it's not unrealistic to make 20% on your money per year out here, take that up to nearly $500,000. $425,000. So what you really want to do, what I would really like to be able to express to each of you out there, because we have a role to play for our kids, our grandkids out here, and it is about how to play this money game. It is really all about money management. It is really all about philosophy, economic philosophy, wealth philosophy. And let's teach our children how to play this game out here. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here. I was fortunate enough to do fill in for Tom yesterday while he was unavailable. And if you caught the show, I suggested it looked like we would see the futures trade a bit lower overnight. That's exactly what we have in place here right now. Right now, as we speak, Dow futures are trading off 17 points. Not a big deal. They're trading at 16,918. S&P futures up 4 points, trading out at 1946 and a bit of change. NASDAQ futures off 6, trading at 37.87. King dollar on the move this morning. You got King dollar up 133 ticks, up 13 cents, trading out at around $80.81. The euro is back a bit this morning. Goldilocks on the move. Gold up $7 and change. It's trading out at $12.6120. Silver up 10 pennies, trading out at $19.17. Light sweet crude up 22 cents, trading out at $104.62. Our call number is 877-927-6648. A quick peek across the globe out here. Let's see what we've got over in Germany. DAX is up 13. FTSE is down 17. Kind of flattish markets. In the Nikkei in Japan last night, off 129 points, about 0.8%. Hang Seng up 198. It made up 0.8% to the upside. And the Shanghai up 1 full percentage point, up at 23 points. So where do we begin our day? Let's go back. Let's take a look at the S&P futures. Let's take a look at a couple of different time frames out here. Let's go take a look at any patterns, any candles, any market profiles. Let's start with our 240-minute chart, our 4-hour chart here, utilizing the S&P futures, using the market profiles, and identify where the levels of support ought to be today. 1944 on that 4-hour chart. Right now it's trading at 1946. So another 2 points south, 2.5 points south, close below 1944 on this 4-hour chart. That suggests that we'll see a deeper retracement in the markets. That's on the S&P futures. Let's go take a look at the daily chart. So if you break support on a 4-hour chart, what does that set up for us inside the daily chart for the S&P? Well, we've got a new market profile that just popped up on my screen here this morning, and that says that resistance In this case here, it should be support because prices above that level would be about 1930. So a move below 1944 pretty much suggests here, if we take a look at the market profile, pull back to the 1930 area. You'll see the very bottom of the new daily profiles at 1917. That's that lime green line going across my screen out there. I am more in agreement that they break below that 1944-ish level. Probably sends us down to around the 1921 area. 1921.95 happens to be that little point of control. And that's what I would suspect we would see if, that's a big if we were to see a move lower. Even though last night when I did Tom's shows, I was suggesting the market was signaling to us that it wanted to pull back. Well, that it has done, but it has not broken down. And take a look at the NASDAQ futures out here. This is the Rhodes Momentum trading strategy indicators out here. We had a price relative strength divergent top that was put in the ES, put in the NASDAQ. And at this stage here, the NASDAQ needs to break this bar here that came in at 4 o'clock this morning. That says the low out there inside the NQ. I didn't go, well, let me go put the ES up here. Let's do that. Let me just try to stay consistent here. That might make it a little bit easier instead of boinging all over the place. Here's the ES. Here's the raw price relative strength divergence. Here's the bearish engulfing candle. Here's the session that took place during the two sessions that were taking place while I was on Tom's show out here last night. And it really needs to break below this candle session right here. And that price point, well, how about that? 1944.75. So if you use the Rhodes Momentum Indicator strategy, it says close below 1944.75 out there. Likewise, if we go back to the 420 or 240-minute chart out here, that gives a price point of 1944.13. So I like that. I like that 1944 level for us to be watching. It may, in fact, act as support out here today. And then a move higher, well, then it sets up a move higher in the market, as the market would not be able to bust things to the downside out here. So that's the settings inside of the ES Mini. If we go take a look at the NQ, we might as well do that since I tipped my hat a little bit. Let's take a look at the NASDAQ futures. 37.88 is where they're trading at. We're going to go take a look at all three of those time frames. So that way we'll take a look at 240, 120, and the daily time frame out here. If we take a look at the 240-minute time frame, it shows that its level of support ought to be 37.78. It's trading at 37.88. So another 10 points down. Don't get too worried just yet, but if you do see a close below 37.78, that suggests a deeper retracement out there. That's on the 240-minute chart. Well, before we go to the daily, let's go take a look at the Rhodes Momentum Indicator. It says that what it needs is a close below 37.84. So 37.84 on the 120-minute chart, 37.78 on the 240-minute chart. Those are the areas, those are key areas for us to be watching throughout the morning, throughout the day. If we take a look at the daily chart out here, daily chart gives us a number as well. It has a new market profile that seems to have popped up on my screen here just as we spoke. Its number is 37.74, so if that level really should hold as support. And if it doesn't, just signals a deeper retracement, that I would suggest you want to buy. 877-927-6648. We'll be right back, folks.
Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Absolutely is, folks. Let's take a look at some stocks here that are moving in the pre-market. Looks like dollar-wise, to the upside, we've got ticker symbol RCPT. Receptos Inc. Looks like they've gotten a phase 2, positive phase 2 results out here. They closed last night at 29.20, and they're going to break their downtrend that it's been in, right, or appears that it's going to. It's trading right now at 38.95. So that is quite a move. Now, 38.95 in this equity is going to take it into the swing point here from April 22nd out there. No real big volume. The volume here, actually, where it's how about this? So the volume, Sing had a fairly decent downdraft back on March 21st and March 24th out there. If you take a look at the low of March 24th, it's 38.76. It's trading at 38.75 right now. So that group of folks is looks like that's a supply line, and they're saying thank goodness, because many of those folks must have ridden it all the way down in the $25 area out here. So that's Receptos Inc. Closed at 29.20 right now, trading out at 38.74, right into a supply line out there. Also to the upside, we have Chilean Pharmaceuticals. I'm sure maybe it's I don't know. ACHN is a ticker symbol. It looks like I probably butchered that name. 4.25 is what it closed at last night. It's going to open up here right in the $6 area. Looks like they've got some positive trials as well or something going on out here. Let's pull this back. Looks like this is going to, well, let me put this on a monthly chart. Let me see what this thing may be trading into. Okay, so on a monthly chart, this thing has got, let's put this on a weekly chart. Just want to see if it's anywhere near its highs, and it most certainly is not. On a, this thing had quite a downdraft out here. So it's going to trade, it's going to try to close that gap this morning, the low of which is from the September 23rd, 2013 area. The bottom of that is 659. It's trading at 604 right now. That could be a significant resistance area. I say could be because it had a downdraft back the week of September 30th. The volume behind that moves looks like maybe about 64 million shares. Let me see, 924. 6.4 million shares. And yesterday, this had some nice movement in it. So yesterday, because even though it's a weekly chart, obviously only yesterday's in there, 4.7 million shares out there. So it's having a nice move. We'll see if it can break above the resistance line, the low of that weekly session from September 23rd. Again, that number is 659. 3D Systems also on the move here this morning. It closed at 50.16. It's trading out at 51.48 out there. 51.48 is still not above its resistance line of its unfair high, which is at 52.69. If it gets above that, then you can see a move higher out here. It's also got a supply line that happens to be, that's a weekly chart we're looking at. Let me put up the daily chart out here. But that supply line, by the way, on a weekly chart here for 3D Systems is from the week of February 3rd. But let's put the daily time frame out here. Let's do that. And that probably is above its market profile. 53.99. No, it's not. So 53.99 in the case of 3D Systems in order for it to begin to get bullish out there. It had a bit of a downdraft not too long ago, May 28th, had volume to the downside, 18 million shares. That was on 3D Systems. We got Chico's FAS. CHS is the ticker symbol. Closed at 15.37. It's trading at 16.63. That is going to be moving into its swing point here from May 13th. That is above its unfair high. That says it's up above resistance. That's if it can close above 16.04 today. It's going to be taking out a swing point. No A to B equals CD pattern or anything like that to the upside, but it does look like this is trying to also break a downtrend out here, and that is on Chico's FAS. Now, to the downside, lead the charts to the downside, we've got the BEAV. BEAV is the ticker symbol, BE Aerospace. It closed at 98.88. It's trading down at 95.61. 95.91 on the daily chart. That is its support level. Now, this thing here would be nice. Depends on the volume. Nice breakout session that the BEAV had on May the 5th out there. Big volume, wide price spread, accelerated volume, the whole kit and caboodle, 8.3 million shares. Now the question's going to be, how is this thing pulling back? Will it hold support? Here's a little bit of a bullish engulfing candle. Not a bit, it's a fairly large bullish engulfing candle that took place on the trading session of May 30th. So, even though it's breaking below the TAS market profile unfair low, the real support on this is going to be that bullish engulfing candle, and that's at a price point of $95.91. It's trading now at $95. If it can hold that and the pullback is on light volume, well, then this nice big move higher inside BEAV should continue on. 877-927-6648. We'll be right back, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're up to the races. We got the Dow trading off 10 points, trading out at 16,931. S&P off 2 at 1949. Composite down 3, trading at 43.32. Russell 2000 off 2.5 points, trading out at 11.73. Apple up 97 cents, trading at 94.60 and change. Receptos up $10. That's 33% out there. Netflix up about $5, a little over 1%. Baidu up a couple bucks. Amazon up $1.76. ISIS Pharmaceuticals up $1.88. That Echelon Pharmaceuticals up $2 out there. Five Below is up $1.76 this morning, up 5%. It's 5 above. Illumina up about 1.5%, up $2.38. Hey, Molson Coors Brewery, TAP is a ticker symbol. I like that. Good creative ticker symbol. It's up 2% this morning. Win results struggling again today. WYNN off $3 or so, $3 and change. Beaver, BE Aerospace off 3.5% down $3. eHealth not healthy this morning, off about 6.5% down $2.56. Signature BK off $2. Franciscus Holdings off $1.82. Cognizant Technologies off $1.70. Las Vegas Sands down $1.22. SanDisk off $1.10. for our man Z in the den. We were talking about gold yesterday, so let's take a look at a quick follow-up. Let's look at, again, multiple time frames when we take a look at gold. So when we were looking at gold yesterday, one of my concerns, which has been alleviated now, was the quick price relative strength divergent pattern that had occurred inside of Goldilocks after, and this is a 120-minute time frame that we're looking at here. You can see the nice bottom that it put in using a price relative strength. That means that price was moving lower with less energy. And when that happens and you see reversal signals, and in the case of Goldilocks, a real reversal signal came right here. That's at about 10 o'clock in the morning, and that was on the trading day of June 5th out there. But as soon as it did that, it also went into the overbought status. It moved higher on less relative strength out there. That's never a good scene. However, it's got a moving average, a lagging indicator out here that never crossed to the bearish side, so that is a positive. And if we just simply take a look at candlesticks out here right now, coming in at 8 o'clock last night, you had a nice little hammer candle that had formed out here. That says that support inside of Goldilocks. You don't want to see it close below the level of 12.50.10 on the 120-minute time frame out there. Now, that's one spot, because in this case here, you've always heard me say, well, I think you've heard me say, if you close below a hammer candle, if you're long, you're wrong. Now, what that means, though, is you need to go try to find the next area of support. Well, inside Goldilocks, that next area of support is going to be right here, the bullish engulfing candle that took place at 12 noon. That was on June 6th, but it's really the low of the prior candle. That's your support area, 12.45.70. So that's the current level of support inside of gold, utilizing candlesticks as our tool for helping identify the front line for the bulls are inside of Goldilocks. Now, let's go take a look at the market profiles that we have inside of gold. Let's go take a look at those, see where they are at. Again, this is going to be a little bit of a delay because it's got to be a homemade recipe for the ticker symbol out here, but it's not off by by more than 10 minutes, so not a substantial change. Let's take a look at the 240-minute chart out here. The 240-minute chart, price is up above the level of resistance, which is 12.58.20, so that is a bullish sign out here. We haven't seen Goldilocks get above a level of resistance using a market profile for quite some time. So in gold, that looks bullish. Again, the number there to be watching is 12.58.20. Its level of support should be 12.49.50 using a 240-minute time frame. Let's switch over. We'll take a look at the daily. I'll just do that right here instead of switching over to charts. The daily chart here also looks pretty good because on the daily chart, the level of the unfair high today, so today's close is important, muy importante, 12.56.60 is the number. And right now, of course, I got a little bit of a delay here. It says gold's trading at about 12.60 area. So today, bullish on the daily chart would be a close above 12.56.60 out there. And that is what's going on inside of gold. Let me, as long as I'm here, let me change these time frames back. It'll just be a little bit easier next time I pull something up. Now, one last thing. Let's go over here. Let's take a look at the combo Rhodes momentum indicators. This has got the weekly up on the top. It's got the daily on the bottom. Because of all the data we need, I need to put up the continuous contract. And this says the next level of resistance for gold, next hurdle that it needs to overcome is going to be 12.82.50. 12.82.50 is the 50-day exponential moving average. That level has acted as resistance really for quite some time, so be very bullish in order for gold to get above 12.82.50. Even on the weekly chart, that would also be nice and bullish. It would be getting above this little dashed line on my screen there, and that would be short-term bullish. Of course, the real number that Goldilocks needs to get above, it needs to close above this candle here. That's from the weekend of June 2nd, and that price point, by the way, is 12.94.80. That's another 30 some odd bucks higher out there. So that is what's going on in the world of Goldilocks as I see it. So I hope that helps Z out there in the den. You know what we can do here with gold looking like it is most certainly attempting to break out. Let's go do this here. I've got a indicator. I've got a market analyzer. So let's go take a look at the equities within inside the GDX. I'm doing this on another screen. I'll pull it over here in a moment. Just let me load the template is what I want to do. Now, let's take a look at this. Usually I take a look at a monthly, weekly, and daily time frame. And that's not really a bad thing to do. Let's do that. Let's use the monthly, weekly. Yeah, let's use the monthly, weekly, and daily time frames out here. And what I'm going to do is, I believe I have all of the equities inside the GDX. So let's go see what's going on inside the GDX. Let me see. Pull this down here. These are just a number of different watch lists out here. Where is it? Come on, A, B, C, D. If I could figure this out, GDX. There it is. Here's the GDX watch. Here's what, in essence, represents the GDX. Now, there's a number of Canadian and Mexican, not a number, but there's a handful of stocks that I don't get access to. Oh, there's one of them, AGI, for some reason. So I'm gonna go ahead and let this. Let me try to get rid of that on the screen out here. Let me delete that. There's another one, I will do that, let that run on another screen out there, and then we'll come back and we'll take a look at it. I'm using a different data feed for that, and so for some reason it's not picking that up. In fact, I'm going to go ahead and delete that because that's just going to send all kinds of messages to my telephone system as far as trade alerts. So I'll do that. We'll go ahead and take a look at that. I'll have to figure out I'll have to switch the data feed on that in order to be able to better look at what's going on inside of the GDX. But instead of doing that for the moment, let's just go take a look at the GDX out here. Yeah, my system's going bonkers with all the trade alert messages or failure messages, in this case, on my system. But let's go take a look at the GDX. Let's go see what it is trading into. And then did have a request to go take a look at JetBlue. I see that. So we'll take a look at JetBlue in a few moments. But if we look at the market vectors, Gold Miners Trust up 33 cents right now. It's trading out at 22.88. Let's go see what it is. So just like Goldilocks out here, and I've shown the chart before in the past how the GDX follows gold. So if you can catch the breakout of gold, you can catch the breakout of the GDX. Now, we're taking a look at a daily time frame out here. What the daily time frame is showing us is right now today it's unfair high. Its resistance level is 22.61. It's trading at 22.88 right now. So your stop on this type of a trade, if you're going to trade the GDX or you're going to trade one of the other ETF structures out there, you'd want to close out that trade. It would suggest that you were wrong if you were to see it close below 22.10. Now, that's not really a bad reward to risk, at least the way it looks to me. 22.10, less than that, needs to be your stop. Right now, the entry point is 22.86 out there. Maybe I can do a entire trade analysis here on my system. We can do the actual money management aspect of it. Let's take a look at a couple different time frames. So let's look at the 240 minute. Let's take a look at the weekly chart. We'll go to the weekly chart to identify where there's some logical areas of resistance out here. 240-minute chart, nice, long, and strong. 2250 is the number there that it's up above as far as resistance. 2228 is its support level on that chart. I did mention the weekly. Let's go take a look at the weekly chart for the Gold Vector Miners Trust out here, the GDX. Let's go see what it's doing. So it says 2467 is a likely resistance area, somewhere right around that 2467-ish mark out here. Let me switch tabs. Let's go do this. Get a kind of break with me because I certainly wasn't planning on that. Let me go back and we'll go to the we'll go to take a look at our position size calculator. We'll do this now. I got to grab a sheet of paper. All right, so you've got the GDX trading at 2281. And one of our target areas is going to be 2467. We'll just use that as the number, 2281. What I would have to say, though, your real target, we know that's resistance, but your real target ought to be the swing point. Again, it's a weekly chart that we're looking at. Let's go take a look at the daily chart, and let's go see where the daily swings are out here as we do the analysis inside the GDX. The weekly swing is going to take you all the way back here to May 5th, and that's it. Okay, that's cool. That's perfect. Because it says the high of that is 2467. There you go. So 2467. That would be our target on a daily chart. That 2467 happens to also be the market profile resistance area, right? So that's cool how that worked out. You gotta love how these numbers just come together. So now we're going to go take a look at the GDX, and the whole key to the whole key to this whole game, folks, is money management, and it's one thing that's really it's not taught anywhere. It's taught in some books. You can find it for sure, just like you can find a book that talks about candlesticks, just like you can find a book that talks about A to B equals CD patterns or Gartleys and butterflies. But what you don't get is you don't get a book that puts it all together. Well, that book is called The Book of Mastering Probabilities. I put it all together for you. Let me go ahead and explode the text up, make it a little bit easier for you to see. So this is a position size calculator, and it truly is. There's nothing more important than money management, and that means proper position sizing out here. This is a little calculator. It comes with my Mastering Probability service out here. You go ahead and put in the symbol that you want. And then really what you're doing is you're selecting, is this a stock? Is this an index ETF, a sub-index ETF? In this case here, we're going to say it's a sub-index. Are we going long or short? In this case, we're going to go long. What's your trading capital? I always like to figure things in even numbers. So for every $10,000 in free trading capital, you'd put in your total balance. But we'll do this so it makes it easier for you to go ahead and multiply up, down, what have you. Our entry price, we're going to say it's right about now inside the GDX. That would be 22.81 or so. And our target price here, this is how we're going to bracket the trade, right? 24.67. We're going to determine whether or not there's enough reward to risk out here. And if we take a look at this, tells us that our portfolio allocation using a 1% risk. We're only risking $100. We're risking 1% of the $10,000 on the trade. It's more than 34. It's more than 30%. It's a guideline there. With regard to a sub-index, I don't like to have more than 30% of my capital invested, in one index ETF. 34%, that's within a range, okay, out there. So we don't really need to make a change. This tells us our reward to risk. If this trade were to pay off, it'd be 2.7 to 1 out there. If that fits within inside your value judgment, then this would make a decent trade for you. This would also tell you that on that 1% risk, on that $100, this says that the stop would need to be 22.13. Now, I don't recall what the level is off the top of my head. We're going to go check that out. I'm just going to write this down on a pad of paper out here, 22.13. And 22.13 happens to be our entry price less the average true range. That's this 42 cents out here. And the 42 cents, I go ahead and multiply that times 1.618 expansion out there. That's what helps us identify our stop. Our stop is a 68-cent stop on this trade out here. Now, a lot of times people think in a volatile marketplace you should use a tighter stop. Folks, that is the actual exact type of thinking that'll get you in a ton of trouble out there. A stock moves, an ETF moves, an index moves, everything moves on average at least. And if you do average, what you're going to get is poor. That's just the way that it works out there. How are you going to hire somebody that's going to give you, if you were an employer, what type of productivity do you think you're going to get from somebody who gives you average productivity? Yeah, poor. You're not going to get average. You're going to get poor out there. In this case here, we don't do anything average. To think that I know where to enter, or any of us know where to actually enter a trade, is a little bit insane, in my opinion. That's just my opinion out here, especially when we know that on the average day, in this case here, the GDX over the past 10 days has moved an average of 42 cents. How would you like to enter the trade, be too tight on the stop, only for it to then work in your, how's that going to make you feel? Not good. I promise you not good. So that's why you want to make sure you understand on an average daily basis what's the average move. In this case here, we can see over the past 10 trading sessions that the actual low movement in any one trading session occurred on the date of June 4th, 20 cents out there. Whereas the large movement, the highest movement, took place here on the day of May 30th, 56 cents. So using a stop here of 68 cents should keep us out of harm's way. If the trade's going to work, it's going to work out there. And the only thing that it impacts is the number of shares that you're buying. You see, because what you're doing here is you're saying, I'm going to risk $100. You're going to risk 1%. You're going to take that $100 and you're going to divide it by 68 cents. That's what tells you to buy 147 shares. Hey, splurge. Go ahead and round it up to 150 shares. But that would be the trade on GDX. 877-927-6648. We'll be right back, folks.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this business, and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is. Welcome back, folks. Right now, the Dow is trading off 20 points. It's down to 16,923. S&P off a 1.5. The composite is basically flat, down 91 cents right now. So and using the NASDAQ futures, and I apologize, during that break there, I had to take care of answering a couple of emails, and so I wasn't able to switch things over to take a look at the holdings with inside the GDX. The GDX, obviously, the entire basket of metals out there. During the next show, the Money Masters show, I should have enough time to go ahead and change my data feed, which will be a little bit easier, and then we can take a look at the GDX or the holdings inside there. See if anything sticks out to us that might even look like a better trade out there. With regard to the Nasdaq, I'm going to go back and as we began the show, we were taking a look at the markets. taking a look at the futures market specifically, and what I was indicating there, I'm going to put this back up on our screen here. In order for selling pressure to truly continue, the signal that we needed was on the 120-minute chart. We needed to see a close below 37.84.75. You can see we're trading at 37.95 at this stage here. So even though it moved below it slightly, the key is it needed to close below that level, and that is not what is taking place as we speak right now, especially as we go into this 10 a.m. session out here. So the mere fact that, let me just reload my script out here. No, the mere fact that it has not done that is that a suggestion that the move lower is over? No, it just means that, the NASDAQ, in order for the NASDAQ to really give us a sell signal, that's what we need to see is a close below that session. That's the session at 4 a.m. this morning, and that has not taken place. If I take a look at the Dow, though, the Dow a little bit, I don't know percentage-wise if it's weaker. Now, even the Dow has not given us a sell type of signal or continued pressure. That needs to see it close below 16,904. You're trading at 16,904 as we speak right now, 16,906. So if it did close below 16,904 in the next, what looks like 3.5 minutes or so out here, the Dow would be giving us a potential sell signal on here. You want to see some synergy. You'd like to see the NASDAQ and the S&P futures also giving you that signal. So we'll check in on that during the next show, as well as I'll try to get the holdings with inside the GDX up on my screen out here. If I take a look at the New York Stock Exchange, let's go see what we have going on over here. I think it needs 1,400 net declining issues in order for the bears to take control of the market today. It's minus 600 right now. Let me see if I pull up my... let's see here, see if I can find it. I guess I got to pull up the newsletter in order to be able to find that number because I don't have the computer. I don't have the spreadsheet opened up on that one. I guess there's a little bit of mumbling going on here. Sorry about that. I am just trying to get the number for you. It's 1694. Boy, was I off. It's not 1,300. 1,694 net declining issues is what would be needed. That'd be pretty decent reversal day in the markets. Right now you're down at minus 616 as we speak. Let's go check in on the VIX index. Let's go see what it is doing. Just looking at a couple different liquidity gauges out here to assess what the market is doing. VIX index certainly moving higher, but still below the 50-day exponential moving average, which is priced out at 1281. As long as it stays below 1281, that is certainly short and long-term, intermediate-term bullish out there. Let me go check in real quickly here on my euro-yen. Euro-yen struggling a bit out here. If I take a look at retracements from low to high, it's made a 0.786 retracement. So long as it holds 138.41, that would be bullish out there. Folks, it is terrific Tuesday. As always, thanks so much for joining us. Have a great day. I look forward to seeing you real soon. Take care now.
Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.